Welcome to today's market report. European stock markets edged higher on Thursday, helped by solid earnings releases, including gains for Credit Agricole during a busy day for corporate news. DAX traded 0.5% higher, UK FTSE 100 climbed 0.5%, CAC 40 in France rose 0.2%. Stock markets have posted strong gains over the last few months on expectations that additional US fiscal stimulus coupled with global vaccination programs would usher in a period of economic growth as the influence of the coronavirus pandemic waned. However, the ongoing earnings season has been the dominant driving force on Thursday, with the banking sector in particular focus. Credit Agricole stock soared 5.1% after the Paris-based bank indicated that the worst of the COVID-19 pandemic may have passed, reporting lower provisions and a larger than expected return to dividends. Commerzbank stock, on the flip side, fell 5.1% after the German lender said that its revenue will probably shrink slightly this year after reporting a quarterly loss of 2.7 billion euros after writing down asset values and booking costs for future job cuts. UniCredit stock fell 2.3% after the Italian bank posted a larger than expected quarterly loss late Wednesday after writing down the value of its investment banking business, while CEO Jean Pierre Mustier stepped it down. AstraZeneca stock rose 1.8% after the UK-based drugmaker beat quarterly sales estimates and forecast 2021 growth even without its COVID-19 vaccine. Danone stock climbed 3% after investment company Artisan Partners demanded strategic changes at the French foods company, and ArcelorMittal stock fell 0.5% after the steel giant reinstated its dividend and named Aditya Mittal as its new chief executive officer. Volkswagen stock climbed 1% after the German car maker announced it was teaming up with US tech giant Microsoft to speed up the development of automated driving. Fresh economic data was thin on the ground in Europe on Thursday, but investors will watch the release of the weekly jobless claims numbers in the US carefully later in the session. Oil prices weakened on Thursday as traders banked profits after a strong rally, despite a larger than expected drop in US crude supplies, raising hopes of a recovery in demand in the world's largest consumer. The Brent contract fell 0.6% to $61.09 per barrel. WTI traded 0.6% lower at $58.35 per barrel. Gold futures rose 0.1% to $1,843.30 per ounce. On the FX front, the GBP-USD pair fell over 40 pips during the early European session and refreshed daily lows around 138.15 region in the last hour. The pair struggled to preserve its modest intraday gains and started retreating from the vicinity of near the 3-year tops around 138.60 to 138.65 region touched on Wednesday. The pullback could be solely attributed to some profit-taking and is likely to remain limited amid absent relevant fundamental catalysts. The British pound might continue to benefit from the UK's lead in terms of the coronavirus vaccination drive, which could facilitate an earlier easing of lockdown restrictions. Adding to this, diminishing odds from any BOE interest rate cut could further underpin the sterling and extend some support to the GBP-USD pair. On the other hand, the US dollar languished near 2-week lows amid the prevalent risk-on mood and was also pressured by a subsequent fall in US Treasury bond yields. This, along with Wednesday's weaker US consumer inflation figures and dovish comments from the Fed Chair Jerome Powell, may keep the US dollar bulls on the defense. This in turn warrants some caution for bearish traders and before positioning for a meaningful corrective fall around the GBP-USD pair. Hence, any further decline below the 138 round figure mark might still be seen as a buying opportunity and find decent support near the 137.60 to 137.55 strong resistance break point. Market participants now look forward to the US economic docket, highlighting the release of the usual initial weekly jobless claims data. Apart from this, the broader market risk sentiment and the US bond yields might influence the US dollar price dynamics. Eurodollar looks to extend the weekly upside, although it seems a tough resistance has emerged around 121.50 for the time being. Meanwhile, the dollar index was up less than 0.1% at 90.406, after earlier falling as low as 90.249, a 2-week low on Wednesday. Dollar yen was up 0.1% at 104.66. Aussie dollar was at 0.7741. This is today's market news. Thanks for listening. We'll see you next time.